How do you compare your loan estimate with the closing disclosure? Imagine you're about to sign your home loan papers, but first, you want to make sure everything matches up. That's where comparing your loan estimate and closing disclosure comes in. These two documents are like your financial roadmaps at different points in the home buying process. The loan estimate comes early, right after you apply for a mortgage, giving you a snapshot of what your loan might look like. It shows the estimated loan amount, interest rate, monthly payments, and closing costs. Think of it as a rough draft of your mortgage plan. The closing disclosure arrives closer to the closing day, at least 3 business days before you sign final papers. It gives the exact details of your loan, including the final loan amount, interest rate, monthly payment, and all costs involved. Comparing these two documents helps you spot any surprises before you commit. Start by checking the main loan terms. Make sure the loan amount, interest rate, and loan type on the closing disclosure are close to what was on your loan estimate. Small differences are normal because of market changes or updated info, but big differences should raise questions. Next, look at the total closing costs. The final costs on the closing disclosure should not be more than 10% higher than the estimate. If they are, ask your lender why. Then, compare your expected monthly payment and the annual percentage rate. If these are way off, it could affect your monthly budget. Also, review any new fees or changes in escrow amounts for taxes and insurance. Sometimes these are updated closer to closing and can change your final costs. Remember, you have at least 3 business days after receiving the closing disclosure to review everything carefully. Use this time to ask questions or clarify any discrepancies with your lender or settlement agent. If there are major changes, like a higher interest rate beyond allowed limits or new fees, your lender must send you a revised closing disclosure. This resets your review period, giving you a chance to understand and agree to the new terms. For Asian American homebuyers, especially those navigating the U.S. mortgage system for the first time, taking the time to compare these documents is a smart move. It helps prevent surprises and ensures transparency, so you can plan your finances confidently. Remember, carefully reviewing both documents confirms that the final loan matches what you initially agreed to. It's your way of making sure there are no hidden costs and that you're fully prepared before signing on the dotted line.